Weeks of anticipation have been building to the opening tip-off tonight. Not the basketball game. Earnings season is officially here. Investor Beat starts now. Thanks for watching. I'm Chris Hill. A flat start to the trading week with the Dow treading water for most of the day. Shares of healthcare giant Johnson & Johnson were lower thanks to the stock getting a downgrade. Joining me in studio today, Jason Moser and Matt Argesinger. Earnings season officially kicks off with Dow component Alcoa reporting first quarter results after the market closes. Already, however, some are cautioning investors not to expect too much from companies this quarter. And Matt, this seems like a legitimate warning when you consider the fact that of the S&P 500 companies, over 100 of them have already issued sort of lowered guidance for the quarter.
That's right. It's going to be a little bit of a dicey quarter, but I think this quarter, more than any other quarter in recent years, is you really want to focus on revenue growth, not earnings. I mean, you should never really pay attention to earnings because there's so much that goes into that. Pay attention to revenue growth, and on the cost side, look at R&D spending and marketing spending. I think if a company disappoints on the earnings side, that's okay as long as they're making those investments for the future, and I think that's what you want to be paying attention to.
And Jason, when you consider the run-up that the market has had, particularly over the last 6 months ago, this seems like one of those times when investors really want to stick to their knitting.
Yeah, I think you're absolutely right. I mean, we always like to throw that word frothy around. I think today the market is legitimately frothy at about 18 times earnings. With that said, you know, like Matty was talking about revenue growth, that 18 times earnings, I don't think it really does show that revenue growth has slowed among a lot of these companies over the past few quarters and years. And so really we're seeing a lot of companies playing defense by stocking their balance sheets with lots of cash. Unfortunately, a lot of that cash is overseas, but still the intention is to bring a lot of it back, or to bring the cash that they have here at least to pay some dividends, some share buybacks, and even some acquisitions, but definitely stick with what you know.
This seems like one of those times when there are companies out there. Every company wants a great quarter, but there are some companies that actually need a great quarter. So when you look across the public company landscape, what's a company that really needs a hit?
Well, Apple is the obvious one here, but I'm going to go with Baidu. You know, there's been so much negative perception about Baidu, which is, you know, the online search giant in China. New competition from Jihu. You got mobile problems, but this is a company that still dominates its space. You know, the advertising customers continue to grow. Spending per ad customer continues to grow. As long as those are intact, and that's what Baidu reports when they report in a few weeks, I think they'll have a nice rebound.
Jason, what about you? One company that really needs a hit?
Yeah, I think at this point I'm a certified skeptic on Facebook. I mean, I'm not that big of a fan of the service and the investment. To me, I'm still just questioning how it's going to really make its money, because to date, it's still just an ad play. So when we look at Facebook trading at around 13 times sales versus Google at 5, I got to see a little bit more from Facebook, and I don't know that Facebook Home is necessarily going to do it. When I first found out that news, I was really just happy that I have an iPhone and I'm not going to have to deal with it. So for me, Facebook is really going to have to show me something special.
All right, let's get to some of the day's movers and shakers. Lufkin Industries up nearly 40% after GE announced it's buying the oil field services company for $3.3 billion in cash. Some are saying that GE overpaid for this. What do you think?
Well, they're definitely not getting it for a song. I mean, they're paying around 2.5 times sales. But the thing is, there weren't really many other options out there for GE in trying to get some more exposure to this energy space. So I do think it's actually a good deal. Lufkin's going to give them a little bit more exposure to that oil exploration space. And if investors in GE can view this as a long-term investment to their fastest growing segment, I think they ought to be happy with the results.
Las Vegas Sands up on a new report from Citigroup. Revenue from high roller VIPs made for a great March in casinos in Macau. And Matty, it wasn't just Sands, it was MGM Resorts, it was Wynn. Really across the board, it was looking good for the casinos.
This is Macau, right? I mean, it's estimated that Macau gambling took in $38 billion last year. Compare that to Nevada. The entire state of Nevada took in about $13 billion. That just shows you how big gaming in Macau is. That number is actually supposed to hit almost $70 billion by 2015. All these companies have assets there. They're going to benefit from that.
Chipotle moving up on higher than average trading volume. It's been trading up over the last 6 months, but it's still lower than where it was a year ago.
It is, but if you look at just a few months back, it really hit rock bottom after the Einhorn deal with Taco Bell and concerns about food cost inflation. So Chipotle is moving its way slowly back, and the beautiful part about this model is that they own all of the stores. None of these are franchised, which I think is a big deal. And when you have a management team in place with Steve Ells leading the way, you have to look at this really. This is their 20th anniversary this year. I can't wait to see what it looks like in another 20 years.
And finally, shares of Disney hitting a new all-time high. This comes after the recent news that Disney is cutting costs at its studio and consumer products division. This is including layoffs, but I have to assume the princesses are safe.
Princesses are safe, Chris. You know, it's a lot. It takes a lot for Disney to move the needle, but one thing they can do is cut a lot of their own production and start licensing it. That's what they do. They're really good at doing that, and that's an important move that should boost their profit margins over time. So it's not a surprise that the stock is hitting new all-time highs.
All right, that's going to do it for Monday. Let's look ahead to the rest of the week. Maddie, what's one stock you have on your radar?
One stock I'm looking at is PriceSmart. This is kind of the Costco of Latin America. It's kind of a good gauge on consumer spending in that region. So they report earnings tomorrow. I'm paying attention.
All right, Jason, what about you?
The all-exciting maintenance, repair, and operations segment, MRO, as some of us know it. We're talking about
sexy.
Isn't it, though? So MSC Industrial is really one of the leaders in the space. It's a company I follow over Motley Fool One, and they have earnings coming out on Wednesday. They just recently sealed up a deal here to buy Barnes Distribution of North America, and that should close in the third quarter. So I'm interested to see the progress on that deal and sort of how they see the rest of the year playing out.
All right, good start to earnings season, and of course, Louisville, Michigan tonight. All right.
There you go.
For Jason Moser and Matt Argesinger, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interests in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. Don't buy or sell stocks based solely on what you hear.